Good afternoon, everyone. In today's video, we'll take a look at September's seasonality patterns inside of the major index markets. We'll focus in on the S&P, the Dow, the Nasdaq, and the Russell 2000. Now, in case you don't already have our seasonal analysis indicator, you can download that for free from our website. The URL is tosindicators.com/indicators/seasonal-analysis. I'll leave a link to that in the description box as well. On this webpage, you can watch the tutorial in case you're curious around how the indicator is built, and you can also download the indicator for free by clicking this big green button. You will need it to follow along, and if you're curious to try and repeat the same exercise on your own custom markets, stocks, ETFs, futures, whatever it may be, you'll need the indicator to also do that research. Now, the way I've layered this video is the following. We'll start with taking a look at the three broader major indices together, and the goal here is to try and find high-level patterns of what tends to happen in September, before we then separate these index markets to see how they've performed individually. We'll look at the S&P first, then the Dow, then the Nasdaq, and even layer on the Russell. The goal with the individual exercise here is to try and find the leaders and the laggards in the month of September, so we have a complete picture of what tends to happen on the broader scale, and then we also know a little bit more specifics with individual research in these major indices. The end goal that we're really looking to achieve here is to answer one simple question, and that's how have the broader markets performed in the month of September going back 20 years? Once we know the seasonal tendencies, we can also layer on what technical analysis is telling us to really get a full complete picture of what we think is likely to happen in the major index markets. Now let's dive into Thinkorswim and get started with taking a look at the three indices together first. Inside of Thinkorswim, I have just the seasonal analysis indicator loaded on, and for the symbol here, I've typed in SPY plus DIA plus QQQ to get all three markets on one chart. It makes it a lot easier to perform this analysis on the three major indices. If you also want to layer on the Russell, for example, simply add a plus and then IWM to add in the Russell. I'll leave it with just the three for right now. Now inside of the indicator labels, you'll notice that there's two numbers that plot. The first number, which should be something like 60% or a larger number, represents what percentage of the time in that month we tend to close above where we opened. The second number tells you what the average percentage gain or loss is for that month going back whatever period you're going back. In my case, I have a 1-day time frame chart going back 20 years, so this is a 20-year analysis. Now, one thing should stand out here. September is a weak month, and you can see that very clearly with the yellow label. Even though we close above where we opened 60% of the time, the net percentage gain inside of these three major indices is still negative 0.67%. Compare that with the other months where we also have a negative number. June, negative 0.64%, February, fairly negligible, negative 0.03%, but January is definitely the leader here with a negative 0.79% and also tends to close up less than 50% of the time. So inside of September here, we can see that while we do tend to close above where we opened more often than not, our overall net return for the three major indices is still negative. So this gives us a bearish bias inside of the three major indices. Now let's dive into the SPY individually first here and then move on to the other index markets. Inside of the S&P, we still have this broader downtrending channel. We gapped up on Friday. We've seen a lot of shorter term strength here with this move, but we also have resistance coming up really near that 410 mark from a technical analysis standpoint inside of a broader downtrending channel. Inside of SPY here, our seasonal analysis indicator is telling us that really there's 3 months out of the year where the S&P tends to underperform. That's January, June, and September. If we take a look at the percentages here, September tends to lead the way in terms of the average return, negative 0.9% compared to June's negative 0.8% compared to January's negative 0.72%. In terms of how many times we tend to close up here, 55% inside of the S&P 500. So we know so far the S&P's week tends to close above where it's opened about 50 or 45% of the time. 55% we close above. The month of September opened with this candle right here, So our opening price is really at 392.78. Let's use our price level tool to draw a line there. So we know that about 45% of the time we close below this level, but really the return percentage here is what we're more focused in on. September tends to be a weaker month. We also have resistance here near that 410 mark, which would serve as where the supply zone really begins. Goes from 410 all the way up to the most recent highs at 431-ish. So that gives us overall technical bias for the downside. Let's compare this with now, next, the Dow. So inside of the Dow here, taking a look at the same 20-year analysis, we can see more months tend to be weaker. January, February, June, August, and September. If we take a look at the percentages there, we have a slightly different story compared to the S&P. Inside of the Dow, January tends to very clearly be the lowest month here, the most underperforming month. February is at negative 0.18%. Moving on to just September, that's a negative 0.34%. Similar numbers in terms of the S&P to how many times we close up compared to down. So the Dow compared to the S&P, a little bit stronger, I would argue, compared to what seems to be the weakness in the S&P, which should then imply that the Nasdaq follows suit to what the S&P is doing. Take a look here. January, February, June, September, and December tend to be weaker months. September, 55% of the time, we tend to close up, but our actual return for the month of September, negative 0.55%. Contrast that with the other yellow labels you see, and you'll see that September is the strongest month in terms of which is the least performing or the most underperformer. So from the three indices that we've seen so far, we know that the S&P and the Qs tend to be the weaker sectors, or the weaker indices rather, inside of the broader indices in the month of September. The Dow a little bit less. So in terms of which we would expect to underperform more than the others, that would be these two right here. Now let's move on to the small caps, see if there's any patterns there. Inside of the small caps, very similar idea here, January, August, and September as our weaker months. Inside of September, that tends to close up only 45% of the time. So 55% of the time, we tend to close below where we opened. And inside of the Russell, where we opened would be right here at 181.78. So let's go ahead and draw a price level right there as well. So more often than not, we would expect the Russell to close below this price level right here. Overall, inside of the Russell, we still have that same downtrending channel, still a downtrend overall with the bearish bias. So if we were to recap what we've learned from this exercise here, really we have three indices that stand out in terms of which are weaker than the other one, which would be the S&P, the Qs, and now IWM as well. IWM tends to close down more often inside of the month of September compared to even the S&P and the Qs. So small caps we expect to be weaker in the month of September compared to SPY, the Nasdaq. In terms of the leader, quote unquote, the Dow is very clearly the leader here, which is really stemming from it being less weak compared to these other three indices that we've taken a look at. Again, you can download the seasonal analysis indicator from our website in case you'd like to dive a little bit deeper here. Maybe instead of 20 years, you'd like to narrow down this time frame to just the past 5 years. You can see how that performance has changed when you narrow down the historical period that you are using to measure or research what the seasonal tendencies tend to be. You can also expand this to any other sector you'd like. Say you're curious about the semis, you could also plug in stocks to try and get an idea of what tends to happen inside of that particular market. So the possibilities here are endless, but we started with the major index markets together first, and then we started to separate them individually. We found which were the leaders, we found which were the laggards. The leader really stemmed from being less weak compared to the other three indices, which were the SPY, Qs, and IWM. I hope you found this video to be useful for those of you looking to try and use seasonal analysis to understand what the month of September really tends to hold for traders and investors together. Take care everyone, good luck trading, and I'll see you in the next update.